Alright, let's begin the question on the Rose Hall Golf Club. Alright, we're given the receipt and payment account. You can read the detail above. And within the body of the receipt and payment account, we can see that you have an opening balance. That is your opening cash or bank balance. You have on the debit side all monies collected. On the credit side, all payments made during the year. Underneath, you're given two lists of balances. One at the start of January 2017 and the other at the 31st of January 2017. So these are opening balances, a balance brought down, and these are closing balances, a balance carried down. So we have opening subscription in advance, we have closing. Opening subscription in arrears, and we have closing. We have equipment, opening balance, and closing. We have inventory or stock, opening balance and closing. We have amount owing to suppliers. Okay, so that would be like your creditors figure, opening and closing. Now in the receipts and payment account, we have a number of items. You have rent and rate. Now it is not uncommon to see underneath here just the same rent owing or rent prepaid, opening balance, closing balance, so that we would know we'd have to adjust the rent figure. But in this case, we don't have to do that. It cannot be applied to any other expense. All right, extension to clubhouse, secretarial expenses, supplies, suppliers for competition price, stationery, equipment purchase, refreshment for competition, repairs, and your closing balance. Alright, so your closing balance belong under this heading, whereas your opening balance also belong under that heading, the opening balance heading, 1st January. The opening balance of 15,000 belong with the 1st January 2017 balances. The closing balance of 4,100 belong with 31st December 2017 balances. Alright, when dealing with these questions, it is important that you keep your eyes open. For instance, equipment, 15,200. We have up here $6,000 for equipment. So it means if we add 6,000 to 15,200, we would get 21,200, which means the closing balance should be 21,200. That is an indication that there is depreciation on equipment. All right. In addition, owing to suppliers of competition prices, you have an opening balance, you have a closing balance, and in the question, in the receipt and payment, suppliers for competition prices, you paid them $500. So if you were to prepare a simple creditors control account, you would be able to determine the exact amount of purchases of competition prices. Alright, you're told to prepare a statement of affairs for the club as at 1st January 2017. Okay. Alright, we head up Rose Hall Golf Club, statement of affairs as at 1st January 2017. Equipment, 15,200. Subscription in arrears, 1,800. Inventory, 300. Receipts and payment, or you can write bank or cash, 1,500. Next, you're gonna list your liabilities, and we have owing to suppliers, 150. That's a creditor figure. and subscription in advance 1500. So we add our liabilities together, we subtract from the current assets. So our net current asset or working capital is 15,450. To that we would add our fixed asset of 15,200. That will give us a total of 30,650, which is the amount for our accumulated fund. Now this could have been simplified simply listing all of your assets under one column, adding them together, listing all of your liabilities, and just subtracting and putting the answer as accumulated fund. Now, using the T account format, prepare the subscription account for the year ended 31st December 2017. Remember that the subscription account is a revenue account, which would mean the owing brought down would come on the debit side, whereas the owing carried down would go to the credit. The prepaid brought down goes on the on the credit side, and the prepaid carry down goes on the debit. Any amount of monies coming from the receipts and payment account would be recorded on the credit side, which would mean that the figure to be calculated, the income and expenditure account figure, would be placed on the debit side. This is because, as we know, income has a credit balance and subscription receive is the main form of income for that organization. So the fact that the word appear on the debit side here, it means that when it goes into the income and expenditure account, it will be on the credit side. Alright, so we look into the receipts and payment account. We identify the member subscription as 12,000, we record it. We identify the opening prepayment and the opening accruals or owing for subscription, we record it appropriately. We identify the closing prepayment and the closing owing for subscription and record it. Now we total the credit side, we get 14,700. We total the debit side, which at this stage would have 1,800 plus 800, which would be 2,600, and we subtract that 2,600 from the 14,700, and that would give us $12,100. Now it is important to remember also, when you put the carry down in the subscription account, underneath the total, put the respective brought down. So you can see clearly subscription owing at the end of the period, it is a current asset, it's on the debit side. Whereas subscription prepaid, which is on the credit side, it is a current liability, because assets have a normal debit balance, whereas liabilities have a normal credit balance. Now here's a look at the competition trading account or the income statement for the competition. You start with your sales for the competition, 1,300, as you can see in the receipts and payments on the debit side. We have an opening stock of inventory of 300. We have a closing stock of 200. And in between, we have the cost of prices, 400. So we add the opening stock plus the purchases minus the closing stock. That gives us a cost of goods sold of 500. The sales would have been 1,300, which means we got a profit of $800. Now we're going to take away from that now refreshment for the competition, which is an expense of 200, and the secretarial expense of 250. Now that 250 was calculated by looking at the 5,000 and multiplying it by 5%. At the end, we had a profit on competition, which is to be transferred to the income and expenditure account as an income item of $350. I prepared the income and expenditure account for the club for the year ended 31st December 2017. Alright, we have donations $3,500 taken from the debit side of the receipts and payment account. We have subscription $12,100. This figure was obtained from our subscription account when we did our calculation. We have profit from the competition, which is the final answer we obtained from our competition trading account or income statement. We have visitors fee, which is also from the receipts and payment account. So we add all of these income together, we get a total of $16,550, and we subtract our expenses. We have rent and rates $3,500. There is no adjustment to be made to it. There is no accruals or prepayment for rent and rates, so we use the whole figure. Secretarial expenses $4,750. Why? Because it was $5,000. We use 5% of it elsewhere. So 5,000 multiplied by 95 over 100 is 4,750. Or you could have simply subtracted the 250 from the 5,000. Stationery 3,500. Repairs 5,600, and depreciation on equipment 1,600. Again, this is how we calculate the depreciation. We look at the cost for the equipment of 15,200. We add to that the purchase of equipment 6,000, which will give us 21,200, but our closing balance is 19,600, so we subtract 19,600 from it, and we realize that 1,600 is our depreciation. We add all the expenditure together, our expenses, we got 18,950. We can clearly see that the expenditure is bigger than the income, which gives us a deficit or an excess of expenditure over income of $2,400. It's a negative figure, it's included in a bracket. Alright, finally we have a statement of financial position as at 31st December 2017. In other words, a balance sheet. We have our fixed asset, the clubhouse, $4,000. That $4,000 is given here, extension to clubhouse. Now that would be considered capital expenditure. If it was repair, we would put it as an expense in the income and expenditure account. We have equipment, 21,200. We got that figure by adding together the 6,000 for equipment purchase with the opening balance, and we know the closing balance on the equipment account is 19,600. So the figure in between, as we found out before, is the depreciation. Our current assets: subscription in arrears at the end of the year 1,200, inventory 200, and receipts and payment closing balance, because if the carry down is on the credit side, it means the drawdown will be back on the debit side. That gives us a total of 5,500 for current assets, and our current liabilities $50 owing to suppliers of competition prices at the end of the year, and $800 subscription received in advance. That gives us a total of $850. Subtract that $850 from the $5,500, and that gives us a working capital or a net current assets of $4,650. You add that figure to the total of your fixed asset net book value, and you get $28,250. Your accumulated fund, which we found out earlier at the start of the question, $30,650. And from that, you are going to subtract your deficit. We made a deficit of $2,400. You subtract your deficit, you have $28,250, and we can see that our balance sheet totals, they both agree. Thank you for viewing.